Hey traders, 5/11 May clearly has not been a good month so far. Not because of the scoreboard. I don't mind red days. I understand the price action, but from how things are progressing and what's at stake. So first of all, Nick Shaheen here. I do have a big subscribership service going on. This is not about that. This is me griping and venting. They hear me gripe all day. They watch these screens you're watching now all day. We had 313, 280, something like that in the last few days. So we try to find intraday trades and they're working. But my gripe is with the overall narrative that's going on. So I'm not from Wall Street, but I do have a brain. And I know when we're being sold a bill of goods here. And let me just tell you what I see. So today, if you ask anybody, today is Wednesday, we had the CPI come out. If you ask anybody, and they'll tell you today's red day was because of the hot CPI number. Okay? Bullshit, right? It is not about the CPI. I can prove it to you. But it's perception that matters, right? So the CPI actually came out better than last time. But supposedly consensus is it was expecting a little bit lower. So then you have forecast and you have something consensus and then you have actual. Who comes up with these numbers? The forecast, how is the forecast different than the consensus? I know the difference between the two words, and what's the point? Right? Why don't we just go with the actual? Okay? So that aside, why is this not about the CPI? So if you don't know the reason why this happens, if the CPI is hot, that's the job of the Fed right now. They declared war. They're going to kill inflation. That's what the CPI supposedly measured at all cost. So even at the expense of killing the economy. That's what his words were. So his actions are not killing the momentum. It's the fear of his words, his rhetoric, and his friends. They're all a band of crooks or idiots, or they think we're idiots. One of those. So him raising half a point is not the big deal. Powell. Him saying that he's committing to two more, regardless of the data that comes out, and 6 months worth of quantitative tightening. I never get phone calls. I get two back to back. So he committed to raising twice more and committed to 6 months worth of selling assets off their books. Okay, at half pace the first three and full pace the next three. I don't mind him wanting to do that, but not at all cost. What will he do if we get a couple more negative GDP numbers? Okay, what will he do then? Will he continue? He just repeated the mistake he did before, the autopilot thing. He just said autopilot last week, but nobody paid attention to it. That's what he said. When you say, I'm going to do this regardless, you're on autopilot. Okay, back to why is it not about the CPI? So I'm going to shrink myself here if I can do it on the fly. Forgive me, I'm not a video guy. So I'll keep my handsome self in there. So when the Fed raises rates, I mean, when the Fed sees hot CPI, hot inflation, one way it can control it is by making it hard to borrow. And it cannot lend. It cannot control the lending rates, the eventual lending rates. So what it can control is the people who have money to lend us. They can control how cheap it is for them to borrow. So they raise the overnight lending rate. So banks will have a hard time. If the fear today on Wednesday was because of hot inflation, why did yields fall? The TLT, the price of the bonds, rose big time, and the TNX, which represents the 10-year yield, dropped big time. So the initial reaction, I bet you, I didn't look, the initial reaction on the headline, I bet you, yes, it spiked and then fell. Let's see, this is today, and this is 5:30 a.m. my time in California. When the CPI number came out, whoop, that's fear of rate hikes. That's fear of inflation. And then it went down and went red. That's the opposite. So the jolt in the morning was rate hike. But then the markets did well in the middle, and then we fell apart in the end. Well, if it was about rate hikes and hot CPI, why didn't it stay up here and continue to rally? I said to be long the TLT, so this would be a good trade, what I said that. So that's proof that it's not rate hike fears, it's not inflation fears the rest of the day. Okay, so what else? The dollar went red throughout the day. It closed a little bit green. If it was fear of a lot of inflation, the dollar would have spiked too. Because when a central bank is hawkish, its money, the dollar, gets stronger, especially relative to other stuff. And also, rates should rise. In this case, that wasn't. So today was about something else. Maybe it was forced liquidation. Somebody, Brad, hey Brad Zinga, Brad in my chat room suggested that maybe it's forced selling because a huge drop in many stocks, kind of like what happened. We had a similar day right after Netflix. I would say 1 or 2 days later. So maybe it was forced selling. So what happens if you leverage yourself to buy shares of stocks that have collapsed, now your asset that goes against your loan is out of whack. So the broker looks at what else you have. You have Apple, you have a Facebook. Oops, sell. Let's margin calls. Let's cover your margin. So maybe that's what it is. Something different was today. So back to the gripe about the Fed. So they're manipulating the narrative to the point, I think they're going to shoot themselves in the foot. So they say, now I'm going to go political on you. I don't care whether you're on the right or on the left. Here's the logic. Okay, the government is in charge. There's left people in there. There's right people in there. Forget what side you're on. Let's use logic to see the economic pocketbooks, right? We're all on the same side when it comes to pocketbooks. Okay, we're going into elections. The incumbents don't want shitstorm on their hands when they go into the elections, right? So they want things to be good. A stock market crashing is not a good thing, especially when you don't fix inflation. Go read Tony Dwyer. I hope I didn't said his name wrong. He made a point that the yield curve inversion is not happening. That if you focus on the 10s to 2s, you're focusing on the wrong one. You need one that represents more real life. Banks borrow short term, lend midterm. So you need a yield curve that shows that. And last time I checked, it was not dropping. So the Fed's efforts may fail in controlling inflation that way. So they're going to destroy the economy and not do their job. So they're going to create unemployment or make it worse. They're going to, why destroy the economy? Consumer spending, last I checked, according to the government, is 2/3 of the economy in the US. We're spending like idiots right now, which is fine. I'm spending. But if they put a halt to it, then 2/3 of the economy is going to be hit hard. Harder than I think they expected. I don't know if Powell was an economist. I don't think he was. I'm told he's a lawyer from Wall Street. They should put an economist as the head of the biggest economy in the world. Don't you think? I'm just 2 cents there. So what's next? What's next is let's see what comes out with the data. I have zero confidence in the government's data. If I used to be a financial planning and analysis, if I handed my boss a P&L or a report, financial report, and then I go the next time I say, ooh, I missed it by 40%, and they revise things 40% a year later, I would be fired on the spot. I wouldn't be allowed to pack my desk. I would be escorted out the building with a box in my hand. Because it is just ridiculous, these reports, and they were making decisions off of that. Unless the Fed sees something we don't see, they are playing us for fools, and they're talking a political narrative that's going to shoot them in the foot. We're going to have a shit economy, we're going to have a shit stock market, we're going to have a real estate disaster on our hands if they don't change their words. They can raise. I don't mind them raising. Just stop talking like you're out to kill everything with collateral damage at all costs. It's ridiculous. So this idiot, yes, he is a freaking idiot, and the other guy, Bullard, is a crook. Okay, so I hope you two are watching. I doubt you are, but I hope you two are. So how the hell do you go from, oh, it's transitory, which, by the way, you should have defined it like 2 years ago. They meant the rate with which inflation was rising. That's the transitory part, not inflation itself. What? Okay. So how the hell do you go from just months ago, transitory, don't worry about it, you idiot, you don't understand, we got this, to holy shit, I've got to I've got to raise right now, like right now. Where's the fucking fire? Okay, so what? Inflation will fix itself. Let us live with a little bit of inflation. I'm okay. I live in California, I pay $7 for gas. I'm pretty sure I'll drive less and fix inflation that way. There'll be less demand. The people will lower their prices eventually. They'll figure it out. It's not hyperinflation. My mother lives in Lebanon. That's hyperinflation. This inflation will fix itself. Let it burn off. You dumped trillions into the economy. What do you expect? Let it burn off. Don't kill the patient you just fixed. This is a doctor, Powell, gets the patient, gives him full of drugs, little too much. Everybody says, we don't need that much. No, you got to take much. Little too much drugs. Then the patient is super strong now. On his or her way out the hospital, you doll up poison and you drop a brick on his head out the building. Doesn't make sense. You spent trillions to fix it and now you want to break it. On freaking purpose. To what end? Okay, so call me crazy, but that's the shitstorm we're in. Now here are all the cuss words. Probably Google will downgrade this video to like, you can't watch this. How many times did I cuss? 1. Okay, so let's talk charts for a little bit. I am bullish the economy. As long as companies keep reporting growth, I'm okay with that. I fear the political rhetoric and the fight that's going on there. So we have a literal fight in the Ukraine that could explode at any time, broad. We have a fight against inflation where they said we're going to have collateral damage. So now you got a balancing act. At any point in time, I promise you, at any point in time, we can drop 20% any day. This week, next week, it's there. Technically, we should be going to 3,600 at the SPX, technically. This a head and shoulders here somewhere. Downside is this much, which would trigger this one, which you already did. That's the Ukraine bottom, the flash crash. That's asshole Bullard flash crash. That's Ukraine flash crash. S&P walked through it. Tesla today approached it. So Tesla's still not there. Neither here nor there. SPX, same thing. So one neckline triggering the other. Final tally is this is where there should be some stabilization. I will try to catch falling knives using credible spreads, which means that I can leave room for error. But in the end, this is a self-inflicted wound. I understand there'll be red days, but this incessant rhetoric is just incredible. Why do we need 20 Fed heads to talk 40 times in 2 weeks? When they meet, they officially tell us who, what, and how, and their boss takes question and answers. And then we spend 2 weeks, yep, everybody meet twice a week, sometimes twice per day. I saw some schedules. What is happening? Okay. Anyway, namaste. See you later.